Hi, this is Wim Lievens, and in this video I will tell you a little bit more about my whale bars on the NinjaTrader8 platform. As always, we start with a disclaimer. Please beware that when you're trading futures, CFDs, Forex, wherever you are, or other instruments with leverage, that you have to be careful and that you have to understand what leverage is. I am more than happy to help you with this. You can always contact me over my website, mytradeclass.com. You can always test several things through demo accounts. So please do this in order to discover how these leverage products can work in your favor, but also understand the risks involved. Okay, so be careful, but get informed correctly. Now, why trade with whale bars, and what are whale bars? WL, of course, comes from Wim Lievens. It's a bar that I've developed, I would say, 4 or 5 years ago, and has become very popular, I would say, on the European continent. Now, since I have translated my courses in English, it is now, of course, time to present this new tool to you. It's very simple, actually. It's a type of bar, and it's a combination between renko, range, and heikin-ashi bars. So you all know renko bars. They are very clear, very structured, and range bars give you very good detail of where prices are moving. And then you have, of course, many people like heikin-ashi candles for direction. And what I've done, basically, I programmed these three together. So I think you have the best of not both worlds, but of the three candles without having the inconveniences. And as range or renko bars, whale bars are movement bars. They are only built by movement in the market. So if you have big movement, you will see many candles. If you have little movement, you will see little or practically no candles, which is exactly what I want, because I believe that the only way you can make money in the market is, or one of the best ways to make money in the market is recognizing these movements or these potential moves, and to trade only then when market conditions are favorable. So that is one. Another point is, of course, since all these bars, and you see some examples here on the slide on the right, you can, show them in different forms and colors and combinations. Since all these bars are the same size, which of course you can set yourself, the risk reward is substantially better. So you have a money management which brings you in a situation where you can limit your risk quite precisely, but leaving the upside, or when you go short, the downside open, or a lot more open, which is the crux, I think, of making money in the markets, is controlling your risk. And when the market moves in the right direction, just follow the market. And also here, the whale bars can help you. I will show this later. The entries also are a lot more precise, because if you trade with, especially if you day trade with time candles, well, strictly you have to wait until that candle closes, it ends. Now it might be that there's a huge move and you would practically have to wait until that move comes to an end, then enter the market, which would leave you with maybe a stop which you would consider being too high, and maybe a risk you wouldn't like to take. So therefore, here with bars that all have the same size, you know exactly what your risk is, and it will give you also a lot more opportunities to step in and to step out. So you're trading, even if you're already trading with other types of candles. This you could add these VL bars to your trading system, and it could give an extra dimension, making it a lot more precise. Now, I use triads as well, but I will come to that a little bit later. Just a few words about my trading philosophy. It's just, trade what I see and keep it simple. I like to make the distinction between things that are important and not important, and therefore I've listed all this in one of my courses. Is knowing the trading ABC, understanding how markets move, how you can read volume, how you can orientate yourself, how you can make an analysis of the market just by looking at a naked chart, how pros look at charts. It's stuff I learned in Germany. But yes, this is something that I think is important. I'm not a big fan of technical indicators, but I am a big fan of price movement, and I'm also a big fan of volume profiles, understanding where these prices created a lot of volume. So that's how I read the market. Now, in order to be successful in the market, I would say being a successful trader, the strategy or the analysis you do, well, that's 20%. Now, 20% is a lot because every percent counts, right, to make money, but it is only 20%. The money management is even more important. I will come to that in a later video when I present another tool, but I would say it's 30%. So this would actually mean that it would be better having a bad strategy with good money management than vice versa. It's something to think about. And then, of course, the 50%, which is the discipline, controlling emotions. I'm sure you've all heard about that. Now, this is only possible. You can only achieve this 50% if you know exactly what you're going to do with the first two parameters, which is your analysis, your strategies, and your money management. But that is more something we like to do in the course. Last but not least, practice makes perfect. Well, that goes without saying. Trading is like any other thing you do in life, or you like to learn. Well, you can't learn it from a book. You have to do it, put it in motion, trade either together with me or with other people in order to learn and to see or develop your trading style, see what works for you, try to avoid common mistakes as soon as possible. But that is something that we do in the courses. Just to give you an idea, the course is one of the most successful courses of the last 5 years in Europe, and now also available in English. It is therefore the third version. I'm quite pleased with it. You have to see it's about 8 to 10 hours of material. And again, it's not boring material. It is very structured material with some homework involved, some coaching sessions with myself. So if you want to know a little bit more about this, you can always contact me through my website. Just to give you an idea, topics, of course, a little bit about the trading philosophy, but then how to look at these prices, how professionals look at prices. Understanding market structure and cycles, time versus movement, how we look at these price movements, and how do we use, in this case, VL bars. How do we combine time frames, or which time frames or ranges do we combine and why we do this. Money management, how we can apply correct money management with, of course, these VL bars, also with other bars, of course, with time candles, but why it makes a lot more sense for day traders to do this with VL bars. And of course, there are lots of strategies and tools and live trading involved in this course. Now this, I'm sure this is very famous. We've all seen this, and why so many day traders get slaughtered. And again, I've been at the Eurex in Frankfurt. I've seen the statistics where actually they have the statistics of how the retail market is positioned. And it is very scary to see that at any given time, in any given time frame, and on any given product or instrument, whether it's a stock, an index, the Bund or anything else, you clearly see that minimum 70-75% of the public, so the retail market, we are positioned on the wrong side of the market. And there's something there that we have to change. Now, this is more for the course, how to look at this, but still some strategy mistakes which I see a lot with my students, and I've listed just a few, but in most cases this is the ones we have to struggle with or fight with, is trading when there is no trend, or when there is an absence of trend, or sometimes even trading against the current trend because one would think the market's going to turn in another direction. Now, this is something that happens. Entering too close to support and important resistance lines, and this is sometimes because people do not always see how you have to interpret and look at these support and resistance zones, and which are the important zones and how you can recognize them. Yeah, it's not only on the chart. You can use tool like volume profile, for example. This will be a big help in understanding what is happening. The biggest issue I see is the fear of missing out syndrome. You all probably heard of, is basically over trading, where people focus on signals. They have 1, 2, or 3 indicators, and when these indicators give a certain signal, they will enter the market, not looking at context. And this is something that doesn't work, because if you can't recognize these good market conditions, well, you're gonna trade when market conditions are not very good, and that is when people will start just hitting the button and trade and trade and trade again, racking up lots of commissions, also some losses. So this is a model that doesn't work. So be very careful there. Look at context first, and then when everything looks good and there is an advantage, there is an edge, then yes, we take one of these strategies out of our pockets. We, of course, will use the VL bars, and then we will trade. Another one I see is the late entry. Is where actually people will always come 1 or 2 steps too late, because they are waiting for 1 or 2 confirmations of signals, very often with indicators, and then the business model doesn't work anymore. You have to get in there early in order to have a risk reward which is really favorable. In this case, with late entries, the business model is not very good anymore. Playing and gambling is something that I see less and less. I'm very happy with that in the last years. So, trading the news and it's a bit like gambling, and this is something what I would strongly advise against, because I see many people who have been who got hurt by playing this game. Now, just a little more about this price analysis or volume analysis versus indicators. This is actually a real picture I got from someone. Now, we're not here to joke about this, but this is it's quite serious, because people will put so many indicators, lines and stuff on their charts, and will always be on the lookout for new things, and in the end of the day they get lost. There's just too much stuff on there, and you could say there's something I do during my seminars all the time. I say, hey, you point me, give me 1 point on the chart, and I will find you an indicator which fits that point. That is not what we should do. We should, on the contrary, make things a lot more simple and look at what is really important, and that is done with the price movement and volume analysis. And yes, that is done on a naked chart. Yeah. So this is more something I will talk more about when I explain my Super 5 trading system. But I just want to explain the context in which I've developed these tools. I didn't make these tools just because I am a big fan of developing tools. No, I developed them because they had to, fit a certain purpose. Okay, so be careful with these indicators. I'm not saying you can't use any more indicators. By all means do, but limit them. And yes, they can clarify a chart image or help you visually facilitate price analysis, or even when you trade divergences. And fine, that's all good. But let's please accept that 80-90% of our analysis should be done on a chart, not using these indicators, and that these indicators then could come on top. That's the only point I want to make. Now, what we want, or what we want to see, is the beginning of trends. Higher high, higher lows, or lower highs, lower lows. I'm sure you've seen this before, but this is what I'm actually looking at. And once I see something like this develop, I will take one of the strategies out of my pocket. There are many, and wait for the signal, and then trade, and then apply my money management on it. Now, in order to do all this, my VL bars will help me. On the other hand, what I have to do is to avoid these zones. Now, I developed a few tricks to avoid this, and I use the 20 exponential moving average for that. And that is something that I will explain in more detail in the Super 5 tool video, where actually this whole idea of avoiding bad trading situations is incorporated in the tool. Okay, so just want you to know about this. Now, you have several types of candles bars. On the left you see time, and then you have volume or tick charts. There's also one in the middle that are range bars. Then you have renko bars. On the right you see heikin-ashi bars. So you have different type of bars, and they all have value and advantages, but also some inconveniences. For example, I think in range bars there's a little bit too much noise, and renko, they are very clear. The clarity is very good, but not enough detail. And heikin-ashi, the advantage there is, of course, it shows these trends, these moves very smooth and very clear. But the problem I have there is that not all bars are the same size. So you still have these very tall bars, and that is something that I would like to avoid. So what have I done? Basically, I have combined renko, range, and heikin-ashi. So the three bars on the right here on the screen, I have combined into one bar, and that is the VL bar. Okay, so it looks like this. I'll show it later on the NinjaTrader platform, but it could look like this. I can make this bar as wide as I want. I can change the size, of course. Some people prefer candles, others prefer bars. Many of my traders only prefer to see this in one color, which is also very popular. So you can visually present this how you like. Okay, good. Now here again, the advantages: combination of renko, range, and heikin-ashi, or combining detail, clarity, and direction. We avoid the dead zones. The risk reward is substantially better. The entries are much more precise, and we use these triads, which is actually a combination of three candles. It's a bit like market structure high, market structure low. It's exactly the same principle, but here all candles have the same size. So, and that is, I think, an extra advantage, because you see, you know exactly how big, how tall the triad is, how many points, how many ticks, how many pips. So if I get in, if my triad at the top is confirmed, and I have to place my stop under the triad, let's say with one tick for the stop and another tick for the spread, on a tick, close to a tick, what that risk is going to be. And that risk will always be the same. So you're actually trading with a very controlled risk. There are no surprises there. So it helps you a lot in money management, and you've seen before how important that is. I will do another video, because it's another tool I will present, is the volatility exit, is where I made a money management based on the ATR, or the average true range. It's been like 10-11 years that I've traded like this, and I've now developed it into a small tool for NinjaTrader. But they say that an image will say more than 1,000 words, but look at the risk on the bottom. That is a triad. You see these three candles here. That's a triad, confirmed. Now, if you look at any normal move, and I understand you will not always have superb moves, but just look on charts. You will see that very often the move that you get will be substantially longer than the risk of the triad. So you are trading with 4, 3, 5, 8 times the risk. So the risk reward is excellent. And that is actually, we'll talk more about that in the course, what the business model is all about, right? And this tool, whale bars, make that possible. Yeah, you have a much more precise point of entry, but also a lot more precise to manage your risk. Okay, now importing this tool is very simple. Once you've bought it over my website under tools, it's also in English now. I mail you the file, and most people know this already, how this works. They just have to go here in tools, click on there and import. I'm more than happy to show this to you. Yeah, I'll bring it over here. Hold on. So here it is. It's a little smaller, but you go into tools, you go into import, then you go NinjaScript add-on. You just click on there. Normally what I've mailed you, you put it somewhere on your desktop, just click on there, open it, and it will import right away. So it's very, very simple. Then I will explain you something else. If you then afterwards open a chart, and let's say we will open a chart on the Nasdaq, for example, and we will use, now just to make it very simple for you, on 1 minute. So here is a Nasdaq 1 minute. Okay, now you just click in here, right click, you go to data series, and I said, well, I want whale bars, because they will be there, up. And I said, well, it's now morning, I'm going to use 6 ticks. Apply. You can use this fast, slow, and you can, hold on, do this again. There it is. You say, oh, well, it's too small. I like to see candles which are wide. You take 8, and you see it's more clear. Other people like them smaller. You can also turn them into a bar chart. Another thing is very popular is, which I use, is I make them all blue, and I just use them here as a bar chart. You can do this here at the top. You can change this there. You see, I can change the colors, the size, whatever. But What is important is that once you have a trained eye and you learn how to work with this tool, with these VL bars, it shows movement, it shows direction a lot more clear. Of course, once you have this, you can add any tool, any indicator on this, right? So for example, I use this. I'll just make it a little bigger like this. Now I have my trading system on here. I now have a VL bar on the S&P 500. It is morning here in Brussels now where I'm recording this, so there's not a lot of movement in the market, but you see how it works. I can make this a little bigger. You know, I can anticipate orders. I can just, for example, click there and I say buy stop market.
Order submitted.
You see? And I could, right? I can actually anticipate the triad he could make. And that's how I can place the order very precisely, and I can also make sure that when I'm in a trade, like here for example, that I have only the risk. I only have the risk of the triad, right?
Order filled.
You see, now my stop is here. Put it under the triad. You see. Now I hope you can see that the risk I have here is on my screen. It's 2 centimeters, but I could on the normal market conditions, I could easily go.
Order canceled.
I could easily go 6, 7, 8 times. Not always, of course, but if I add them all up, if I do 100 trades or 200 trades, I'll talk to you about the business model. 20% of the trades, I will be, 1 in 4, 1 in 5, 1 in 8, 1 in 10, and these trades will eventually make the difference between winning and losing money the end of the day, week, month.
Order filled.
Okay, good. So very easy to use, very easy to import. One other question I will answer now. It's more something for the course, but it's something that I would like to share with you. This is my 5-minute analysis chart. Now I'm not going to go into detail here, but one thing that I absolutely need is when I do my analysis on where the market could be going on 5 minutes, I can also do this on 30 minutes, is I actually include the average true range. And why do I want to use the average true range? I want to see what the volatility of the market is. Now at the moment, of course, the volatility is very small. It's about 13 ticks, which of course is very, very little on 5 minutes. But what I will do is I will take this value and I will divide it by 3, and that will be the size of my VL bar. So let's say that in the afternoon at the open, we'll go to the other extreme. You are trading on the Nasdaq. You will sometimes in 1 minute have, it could be 90, 100, even 120 sometimes ticks a minute. So yes, you take that, you divide it by 3, and that's the size of the bar. If you like to trade Tesla, you like to, you take Tesla, you calculate the ATR, divided by 3, and that's the size of your bar. You know the size of your bar, you can calculate how much money it is. You should say that normally if you have a triad, you use a bar, you multiply it by 2.5, and that will be more or less where your risk is. So you actually can know in advance. You can test this in demo accounts, of course, but you have a very good idea what the risk is you're playing with. Okay, so for every instrument and every speed, because you do this very fast, you can do this slow, but let's say you want to do it fast, you could use 1 minute chart, take the ATR, divide it by 3, and that's the size of your bar. You want to go a little bit slower, take 3, 5 minutes. Some people take these 5 minutes, but they use it on 3 or 4 instruments at the same time. It's a great tool to add to your trading arsenal. And that's why it's been so popular over the last few years in Europe. I hope you like it. So here another image of the data series where everything is. People who know NinjaTrader8, superb platform, they will know how to do this. It's very easy. More and more material English material will be added to my YouTube channel in the next months. Today there are about, I think, 250, 300 videos already, but in other languages, and English will definitely be on there. There will be live trading on there. I will trade, of course, with these VL bars, and I will trade a lot on NinjaTrader. Okay, so if you have any questions there, don't hesitate to contact me via this email address, or you can just give me a call, contact me, or go through my website. That's it. Well, I think I'm through for today. Thanks again for listening, and I hope to talk to you soon. Bye bye.